Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. As always, my colleagues Sonia and Mangalam with me. Guys, hi. Good
Hi,
morning.
morning.
2 days more. Every day we're counting down and it's getting closer. As we were just saying, I mean, thoda sa dhakka de dijiye. Do din all, right?
As it gets closer and closer to the new year, you realize that you are perhaps the only one working. And there's
At
no
least
one
three
watching.
of us here, Sonia.
There's no one watching, so you can do as you please. But no, I mean, it's the last 2 days of the year, and there's so much to kind of look back on, right? The good, the bad, the ugly. And yeah, I mean, it's been a great year so far.
Absolutely, and we look forward into 23 as always. But, let's just quickly run our viewers through just the broad lay of the land, right? So US markets were trading. And they were down once again. Nasdaq basically the problem point, but the S&P also was down 1.25% or so. It's largely lackluster. Oil is down. I mean, it's a curious kind of price action because you've got this China reopening theme playing out, but oil markets aren't responding. Metals actually are responding more. But it's a big one, and we'll talk more about this in terms of opinion, etc. But so far, oil is well behaved. It's up $10 or so in the last 10 sessions. But last night it didn't do very much. Yields also, I mean, exactly there, about 3 basis point change. So lastly, nothing. Nifty yesterday tested and then turned down from the June lows trend line. And this is what we'd exactly put out yesterday morning. It's an upward sloping trend line. So yesterday the level was 18,170. The market the Nifty broke above it and then turned down back below it. Today, that level on that trend line is 18,190. Right, so we closed at 18,122, not very far away. In a good push, and that should be there. But the point is, will supply come in? Will selling come in around those levels? In any case, I mean, if you're trading, this trend line has proved to be a good one, both on the way down and now as we attempt to retake it. On the way up, I mean, beyond 18,190. You've got 18,235. Again, as I said, very near term. This is within the next 100 points. That is the 50% retracement of the fall from the 14th of December high. So that is the other one. Supports for the Nifty come in at about 18,000. And we put this number out yesterday as well. It's nothing but a very short-term retracement. Yesterday's low was almost exactly at 18,000. I think it was about 17,994 or so. And then the market kind of bounced quite a bit. And then if 18,000 goes, you get 17,780 as the next support for the Nifty. For banks, it's coming up nicely. Again, the banks did a little more, were a little better as compared to the Nifty, almost similar. PSU banks, though, and we'll talk more about this, all sold off in the last 30 minutes. Resistance for the Bank Nifty comes in at 43,165. Which, by the way, is the level where both the 50% retracement of the fall and the 20-day moving average coincide. Actually, it's 43,165, 43,166, the two numbers. So it's coinciding. So that's a very near-term kind of resistance the Bank Nifty's got to take out. And supports for the Bank Nifty come in at about 42,400. We had very strong days on Monday and Tuesday. A little bit of a pause yesterday. And I wouldn't mind if we have a bit more of a pause today as well. We kind of go through. You don't want to do something wild at the end of the year. It seems like good as an idea, but more quiet, normal kind of session, and then kind of take stock as we enter the new year. I think that's the way to go. The SGX is indicating a 70-80 odd point lower start, almost exactly like what we were seeing on the screen yesterday. But I think with the days we've had earlier this week, some confidence has returned once again. At least the very bad memories of last Thursday and Friday when the bottom kind of fell out, that is a little bit in the past. Not completely erased, but I think this week has done good. So 80-point lower start on the SGX. Sonia, hi. Mangalam, hi.
Hi, morning. So, there's this phrase, right? It's called coasting at work, when you just kind of do the bare minimum and, you don't stretch yourself, you don't go above and beyond, just basic. That's what you're seeing in the market as well. The market is just sort of coasting.
I thought this was like a personal admission or something. I don't know where it was going.
So I guess if traders...
Was it December specific or is it like throughout the year just coasting?
Well, we'll discuss that at the other side of the camera, right? But For now, I mean, for the market as well, I think it's, traders, whoever, are still working, they're perhaps just using this time to just consolidate in the market. There was 2 days of a good pullback, and then the market chose to consolidate at this pivot of 18,000. Just a couple of things that I'm watching out for. There are still recession fears across the globe, and that perhaps could weigh on sentiment. The Dow was down quite a bit yesterday. A lot of technology stocks, big tech in the US has been under pressure. Apple hit a fresh 52-week low on the iPhone supply concerns, as well as Tesla, we told you, is down quite a bit from November of 2021. Tesla's down about 70%. So a lot of these big tech stocks are now under pressure in the US, so keep an eye out on that. In terms of data, I'm watching out for the US weekly jobless claims that are expected to rise to 223,000 from 216,000. So that's an important internal to track. The flows are quite muted towards the end of the year, so not too much. There is buying from DIIs and selling from FIs yet again, but FIs have not sold as much, just about 870 odd crores. So in a sense, the Nifty is largely range bound between that 17,500 to 18,200 level, and this 50-day moving average of 18,235 is the level that's proving to be a bit of a resistance on the upside. Let's see if that gets taken out. For now, it doesn't look like there's any major trigger to get it above that, because the SGX Nifty is also indicating a start in the red. And there is a listing today, KFin Technology, so we'll talk more about that later. But in terms of cues, largely cues are skewed to the downside with global markets under pressure. So let's see which way it goes.
Let's see which way it goes. It's also the December series expiry. And, it's been a long series, the longest this year, because it started on November 25th. And we have the expiry today. Point to point, the Nifty is down 362 points in the December series so far. But it masks the volatility that we saw. On December 1st, we saw the all-time high of the Nifty at 18,887. And last Friday itself, when we thought, the bottom was falling out, the low was made, 17,774. So 1,100 points is a sort of movement that we saw through this series itself. But the last few trading sessions, the Nifty has tried not to bash into the walls too much, just go through the days. That's what's happened. And the FIIs, because there has not been too much, support on the downside, they've covered their short positions. They've, unwound short positions, and their long exposure now is at 48%. Add to that, they've also written around 11,900 put contracts. So lower levels are protected. That's what the expectation is. Because in just the last 3 trading sessions, the FIs have actually covered 51,000 short calls and added 1.6 lakh puts in the expiry week itself. For today, it is likely to be no different from yesterday. The SGX Nifty indicates a dip, and that dip gets bought into. We've seen a lot of writing at the 18,200 call for a premium of 20 rupees that ties in with the resistance of 50-day moving average that Sonia alluded to as well. But the 18,100 put is something that I'm looking at, because that's added about 30 lakh shares in open interest for a premium of 40 rupees. And that tells you that 18,050 to 18,060, right in the zone where the SGX Nifty is indicating an opening, could be a bit of a support. So that's something that we'll be watching out for. And those are important levels. On the way up for the Nifty Bank, the 20-day moving average is proving to be a bit of a headwind as well. So do we cross that or not is the big question.
Okay, well, for now, the SGX Nifty is under quite a bit of pressure. So before we start, let's tell you what all is lined up in the first half of the show today. We'll get you updates from markets across the globe. Cameron Brand of EPFR Global will be with us to discuss global flows picture. Later, our research team will bring you CNBC-TV18's list of top stocks for the day. At around 8:30 a.m., we'll do a fundamental stock analysis with Devin Choksi of KR Choksi, and then momentumizers will follow next to decode a rally in the stock.
All right, let's get you some money market views. Parul Mittal of Standard Chartered Bank says the dollar INR has been range-bound in the last week amid low market liquidity. The dollar weakness and sharp rise in oil prices. She expects the dollar INR pair to trade in a range of between 82.5 to 83 to a dollar next week. She says the moves in the dollar and oil prices should be watched for cues. She expects the rupee to continue to underperform global peers in 2023 on continued elevated trade deficit.
Right, and on the bonds, Parul says that domestic yields have traded range-bound with an upward bias amidst low market liquidity and sharp rise in global yields. She expects the 10-year benchmark bond yield to trade in a range of 7.25 to 7.4% next week. She also says the focus will be on the announcement of Q4 FY23 borrowing calendars for state development loans and for treasury bills.
Right, let's talk about a lot of stocks then that we're watching out for. Obviously, we'll explain all of that to you in just a bit in our special top 10 segment. But the stocks that we're looking at, Spandana Spurti Financial Poonawalla FinCorp, Ashoka Buildcon, Tata Power, JSW Energy, PTC India Financial, Coromandel International, and NACL Industries, along with Bharti Airtel stocks on the radar on the back of positive news flow, and ONGC, that's the only one on our radar, which is likely to open in the red.
Okay, Cameron Brandt is now joining us.